Hi, Shay Russell here, editor of the Daily Reckoning Australia, and let's talk about the Royal Banking Commission. Now, the final review came out on Monday, and I've written on both Monday and Tuesday in the Daily Reckoning Australia my views on the role the regulators played in allowing this banking misconduct to happen, but also too the irony of the Hayne review, where it believes that now that the regulators are responsible for following up on these criminal misconduct cases. However, one topic I haven't touched on yet is the outcome of the review on bank stocks and mortgage broking stocks. Now, on Tuesday, the big four banks' share price all rallied near around 5% for the day. Now, that's a massive gain, so big that even Bloomberg noted it was the single biggest daily gain for any of the big four banks in a decade. In addition to that, AMP, their share price rallied 10%. So effectively what we witnessed here is sort of a sigh of relief from financial investors that, the worst was already factored into the share price. So those big rallies that we saw, I guess, are a relief rally that the banks just got a slap on the wrist in this report. That's in stark contrast to mortgage broking stocks. Now, Mortgage Choice, their share price fell, I think, 22% on Tuesday, and Australian Financial Group, their share price fell 29% on Tuesday. So these are big savage hits to their share price. And the main reason the market reacted like that is because of the Hayne recommendation to change the mortgage broking fee model. Now, currently mortgage brokers receive payment from the banks when you apply for a loan with them. Now, generally it's a trailing commission of about 0.15%. Now, Hayne recommends the end of trailing commissions and creating a model where people pay to see a broker up front. And this is why we saw that savage sell-off in Mortgage Choice and Australian Financial Group, because people feel that it would be a detrimental model for mortgage broking business. From my point of view, I'm not a big fan of trailing commissions. However, I'm sure that there is a better solution than having an ongoing trailing commission for the life of the loan. The other thing too is I can't see how a fee-for-service model where a customer pays a mortgage broker up front to arrange a home loan for them is going to work. If you're applying for a home loan, you want to put every single penny that you've got towards the deposit and reducing the value of the loan. So that extra $3,000, $4,000, $5,000 maybe, or maybe even more, to pay that upfront to a mortgage broker isn't something a customer's going to want to pay. So pushing towards a fee-for-service model could effectively wipe out the 20,000 Australians that do work as mortgage brokers. More to the point too, I sort of feel that by targeting mortgage brokers, the Hayne review really is just a witch hunt into a small section of the financial industry. Now, yes, there was wrongdoing with mortgage brokers, and there was a bunch that created, fraudulent loans. However, it was a small minority of mortgage brokers that did this. What we heard during the Royal Banking Commission was severe financial misconduct from the banks. And not only that, the banks pushed their own products and ignoring their fiduciary responsibility to customers. So by Hayne targeting mortgage brokers over the banks, I feel that as Australians, we've very much missed our chance to have serious banking reform. There's nothing out of this review that is going to force the banks to behave better. As I said before, it's very much a slap on the wrist. And finally too, if both our regulators do want to push for a fee for service and upfront payment model for mortgage brokers, there aren't many people who are going to want to do that. So people are going to leave the mortgage broking industry and they're going to go to the big banks. Essentially, that one decision will give our big banks even more power and will concentrate the mortgage market even more to the big four. They already dominate the mortgage market with around 80% of total mortgages in Australia. So if that recommendation is put into place, it's just going to lead to an even bigger banking sector that we've got. That's all from me today. I'll be back next week with more.